GetCrack. Wake up, motherfucker.
Hey, what's up, guys? It's February 12th, 2025. So, CPI was quite hot. It was a hot CPI today. So, let me get some things set up for you guys. Let's see. All right, let's see. Gotta get the settings. See if I can get the settings thing here. Set up general. Oh, I can't change that. All right. Let's see how this goes. Okay, guys. So let's see what we got on the chart front, and I'll go back to the CPI. So right here we got SMCI. So got a nice pump after earnings, and we're gonna go over some of the numbers, and then we hit 42 again. So I'm watching this thing, see how it handles this range between 39.68 and 42.70. So let's see if it holds halfway through it. Try to keep the upper half of the range today. If it holds this thing, yeah, I might jump in. Okay, again, go long again, because this thing might just keep on moving to 60s, to the 60s. Okay, so if you're more aggressive, you use SMCX. So see if you can get it around like 58 again, and then hold there. Try to make like a stop loss that goes down to like 56 or something. If you're really aggressive. Another one to look at was Tesla. Remember I talked about yesterday, and I think this level is pretty important here, where it's been hanging around now. It's got to hold this area. It's really got to. I mean, otherwise it's going to drop to 290. So see if it can do 335, like hold above that level next few days. And yeah, it's got to cool off. Maybe, I don't know. I mean, the weekly chart, that's a bit tough. Let's see. I'll go on the daily. Yeah, if you go on the daily, yeah, 325. Okay, so it's holding above 335. All right. Yeah, this is kind of a bad overrun here. If you look at the MACD and the red, yeah, I don't know. It might be a good counter trend, right? You might be able to get a quick trade back up if this was like, because this had back-to-back red days like this. You could get a quick trend up here and then short it after February's done. Maybe that's what will happen. So I'll be watching for that. Okay, that's what I'll be watching. The other one was LEU. Okay, so one of those nuclear stocks, LEU, which had earnings on Friday, still doing okay. It's holding. It's definitely holding. All right. And then you have LTBR. Ooh, okay. So after 2 days of pullbacks, so a little bit, slight pullbacks, then it pumped right back up. Beautiful, beautiful. So this thing's up 23% right now. Very risky stock, I would say. But if you look long term, the way it's building this nice base here, so if it can break out at 13, so LTBR, Light Bridge, and then LEU is let's see, this thing, Centrus Energy. Okay. So these two, pretty risky. LTBR is even more risky. The way it moves, very volatile stock. Pretty much acts like a penny stock. I don't know when it's going to do earnings. Earnings is probably end of February if it goes by last year's date. So last year reported on February 28th. So maybe again, I don't think it had an announcement of what day it's going to do it. Yeah. So that's something to look at. LTBR, very volatile. Now the S&P, so it was down, but it's still trying to hold that area. So you got the dashed line at 600. We're still okay. And then the QQQ, let's see, the Nasdaq. So it recovered, right? We're above that box again. This whole box here between 518 and 525, we're back above it. And so let's see if we can get to 531. Small cap, IWM, that's the worst one. It's going to take more of a hit from the CPI news, okay? So I'm going to show you the CPI result here. All right, let's see the CPI results. and present that to you guys and see what's going on. Okay, inflation numbers right here. Core consumer prices in the United States, which exclude items linked to food and energy prices, rose by 0.4% from the previous month in January of 2025 from the 0.2% increase in the previous month, above market expectations of a slower increase of 0.3% to mark the fastest rise since March of last year. Prices rose at a faster pace for transportation services. All right, so you got your Uber, your Lyft. Great. So 1.8% versus 0.5% in December of 2024. And shelter, your rent, 0.4% versus 0.3%. Two key sectors that are monitored as underlying inflation by the Federal Reserve. So those are two important things. That's not going to be good. Okay, for what we have so far here. We got to get this thing down, right? So the last time we had pretty good gains of CPI were here in May and June, but after that we've been pretty much around 0.3% since August to November, and now we're back at 4.4% month over month. Not a good look. Not a good look. Okay. But overall, market's kind of shrugging it off, at least for the large caps. And we see some stocks, as I've shown, that you can get quite a good value for. Now I'm going to play a video for SMCI. So SMCI had bad earnings, supposedly, but for some reason, their 2027 forecast or 2026 forecast was double what was expected. So 2 years ahead. So this year's going to be bad, but the next year after that is going to be great. I have no idea where they pulled that out of their ass or what, but let's see if the market believes it, right? So that's why I'm going to watch that chart today and the next several days. And you have to remember, Monday we're going to have holidays with a President's Day, so the market will be closed then. All right. All right. Let's see here. There you go.
What we're seeing right now, these are preliminary numbers, so I have to keep that in mind. It's not an actual concrete earnings report. So EPS for Q2, this coming from the company, 58 cents to 60 cents. That is lower than what the street anticipated on revenues for Q2 between 5.6 and 5.7 billion. Again, this is a range that came in lower than what the street was anticipating. And we talk about Q3 guidance, also lighter at 46 cents to 62 cents. That's lighter than the street. 5 to 6 billion for Q3 revenue. They're cutting their full year guidance, fiscal 2025, to 23.5 to 25 billion. So you're seeing lower estimates or lower range compared to all the estimates. And there's one line in this press release saying that with our leading direct liquid cooling technology, over 30% of new data centers are expected to be adopted in the next 12 months. So they're saying that there's a market for it and that they're positioned for it, and yet you're seeing these estimates a lot lower than what the street was anticipating, and why you're seeing the stock just all over the place.
Okay. It looks like there's also some news that we'll be looking at having to do with private placement of convertible notes and the 10K. They're working to file that by the middle of the calendar year. So that I'm sure investors will be reacting to as well, Morgan.
Yeah, and I mean, this is a name we're seeing right now bouncing between gains and losses. Paul, I want to get your thoughts on this because Supermicro was such a high flyer, then we saw it fall so far. And some of the issues have been, I think, for the company specifically, despite the secular data center infrastructure build out and demand we see.
Yeah, so it's become increasingly competitive in the space. But I mean, broader picture, if you can't get your financials in order, we tend to stay away from those names until they can get some numbers out. And so I would just, at this point, until you get to those numbers being published.
Okay, so let's see how I got here. I'm going to show the article. Oh my God, I got to verify I'm a human. Oh my Lord. Okay. You got to be kidding me. Okay, let me share something else. I don't want to verify I'm a human. Okay. I'm not going to verify. I'm a human here, guys. All right, let's go here. Let's read this article. NVIDIA partner Supermicro cuts fiscal 2025 estimates, but sees big growth next year. So this is Patrick Seitz, written yesterday, February 11th, 2025. Supermicro computer late Tuesday missed expectations with its preliminary results for its fiscal second quarter ended December 31st. It also slashed its sales outlook for the full fiscal 2025. However, it set a revenue target for fiscal 2026 that is much higher than current estimates. SMCI stock rose on the news. The San Jose, California-based company, better known as Supermicro, makes data center computers for artificial intelligence and other applications. The company is a total information technology systems provider encompassing services, storage, networking, and other gear, as well as support services. Okay, Supermicro is a key partner of AI chip leader NVIDIA. Supermicro expects a fiscal Q2 quarter two adjusted earnings of 59 cents a share on sales of $5.65 billion based on the midpoint of its estimates. Analysts polled by FactSet were expecting earnings of 61 cents a share on sales of $5.77 billion in the December quarter. Supermicro's preliminary results translate to year-over-year growth of 5% in earnings and 54% in revenue. Supermicro also lowered its revenue guidance for fiscal 2025 to a range of $23.5 billion to $25 billion from its previous outlook for $26 billion to $30 billion. Analysts were already looking for $24.1 billion of sales of fiscal 2025 sales. However, in a press release, Chief Executive Charles Liang predicted fiscal 2026 revenue of $40 billion. Analysts were modeling $29.2 billion. With our leading direct liquid cooling technology and over 30% of new data centers expected to adopt it in the next 12 months, Supermicro is well positioned to grow AI infrastructure design wins based on NVIDIA Blackwell and more. All right. So you got an idea there. So 40 billion versus 29.2 billion in fiscal year 2026. So that's a huge increase for what we got. So let me see if we got another article here. Let's see what we got. Yes, why SMCI update raises more questions. Oh man, you got to pay. Oh man, these archives. Oh man, you used to be able to just archive to get around the paywalls, but looks like they've gotten smarter. They've gotten smarter. So yeah, let's see. I'm gonna have to figure out another way to get around these things. All right. Oh, not gonna read that then. Okay. See what other videos to play, and then we'll move on from there. But let me check how things are going. Lightbridge 50 to 25. Okay, the other one with liquid cooling that got released today was VRT. Okay. So VRT stock. Let's check that one out. VRT. So Vertiv. Yeah, so it's down after earnings. Okay. Down 9%. See long-term chart here. I think we could look at the weekly. Yeah, it's gonna have trouble. So this one also does liquid cooling. I wonder if SMCI just took all their business. Is that why they're doing all that? Huh, interesting. Another one was DNA. That's the other stock I was talking about. Like, so last week you had a good trade, but now it's been pulling back, and I've been wondering where it would stop. So it might be here. So I might jump into it in the coming days, if not today. 11.5. Might take a risk. I don't know if it's going to pull back all the way to 8, though. It could do that. Tomorrow we'll have PPI numbers. I'm not sure if that's going to offset what the losses of all the biotechs and things, because let's see, the biotechs, IWM's going to struggle. It's still down but now it's down 1.15%. So it's at 223 IWM small caps, and you have XBI. Yeah, it's trying to hold this level here. Very important. I don't know if it's going to get back up to 100 after the PPI tomorrow. So if you get a really soft PPI number, that might offset what we had today with the CPI, but CPI was quite hot. Let's see, SMCI is coming back down here to 40. Okay, watch this. Okay, so it looks like it's not holding. So let's see if there any rush of buyers going into the end of day. If not, then forget it. I'm not going to jump back in here. If this is good, if this can hold this here, $40 area, and then bounce right back up, yeah, it could be very wild, very aggressive, but not looking too good so far in this intraday. I don't like this. Yeah, if you look at the 65-minute, yeah, but I mean, it still has a rising hourly moving averages, so technically, even if it keeps dancing here for the next few days, as long as this 40 moving average still goes up, yeah, it's still in play. It's still intact. All right, but as we've shown the charts, like 42 is a big number, and the DeMark indicators also gave that 42. You got to cross it before you want to get to the 60s. That's it. Once it's done with this, it's going to 60. So that's another. So from 40 to 60, that's 50%. Another 50% gainer right here, potentially. So yeah, just keep it on your watch list, SMCI. And if you're more aggressive, SMCX, because you saw that when we got from Monday to this Monday. If you did the whole range, I didn't do the whole range, but that was like 150% right there. Just we're using SMCX ETF 2x leverage. All right. Okay. So let's see what we have for. Oh, did I talk about AOI? AOI, another optical one, right? So yeah, optical for data center. So watch this. This level here, 26. So I might try it again. I tried it at 28. Like it got to about 30 and then it came back to 28. I had to get out pretty much yesterday. But now it's at 26. I might jump back in, see how it goes. Risky, another risky one. So same thing with like DNA. Oh, false start, false move up, come back. Okay, then we'll see where it goes. Try again, because on the longer term chart, you know, this has potential. This has potential because last week's candle here shows like it can try to get back up. And if you look at like Upstart, you know, had earnings today. You see that? You kind of want this. Yeah, you have move up, pull back, and then move right back up. That's it. You are ready to fly higher. Yeah. I mean, I don't know if it's going to do it right this second in February, but hey, the setup is there. The setup is there. So watch these, keep them on your watch list. All right. That's all I got to say. All right, let's go to some videos, some other videos here to play. Andrill. Okay, Andrill.
Joining us now in an exclusive interview is Palmer Luckey, Andrill founder, and before that, the founder of VR company Oculus, which was sold to Facebook in 2014. Palmer, it's great to have you back on the show, and I mention that because in some ways this feels like full circle. I was very surprised to find out that with a $22 billion production contract, IVAS represents the second largest investment in virtual reality ever, behind Meta, which we know made their investments off of the products that you first made more than a decade ago. Your thoughts on what happens next, what this means to take over this contract?
Well, you're right that it's a return to form for me in more ways than one. You know, I started Oculus VR and sold that to Meta before, and I was there for a few years before they fired me. But even before that, as a teenager, I worked at the USC ICT Mixed Reality Lab at an Army project called BraveMind that used virtual reality exposure therapy to treat Army veterans with PTSD. And that was really the first time I was exposed to how government technology procurement and development can be done and deployed. And it's definitely something that stuck with me for a really long time. It's also interesting that, some people said that Meta acquired Oculus, but given that they've spent, what is this? This is $60 billion, $100 billion. They've in a way, Oculus kind of sort of took over their company. But for me, this is a really exciting moment. The idea of putting a heads-up display in a radio and a computer on a soldier is an old one. It's been around since Robert Heinlein's novel Starship Troopers in 1959 at least. And Anduril's been building a lot of the tools that actually make something like that useful. The AI platform that integrates data from all of our sensors, all of our weapons, over 100 existing DoD platforms into a model of the battle space in real time. That's what you really need to make something like this as powerful of a tool as it should be. Not just the ability to see, the thermal spectrum and the visible spectrum and the near IR spectrum, but the ability to see into a digital model of the past, present, and future, and to seamlessly team with large packs of autonomous weapons.
What does this do? And Anduril's been growing gangbusters for a number of years now. You've made acquisitions, just recently announced that you're going to build this super factory, for lack of a better term, in Ohio as well. What does adding this contract and everything that goes along with it into the mix do to further expand Anduril?
Well, Anduril builds a lot of different systems across a lot of different domains. So air, land, sea, subsea, space, cyberspace, eventually subterranean. And IVAS and systems like it are going to be the portal through which the warfighter commands and controls all of these different autonomous weapons, autonomous sensors. That really gets you to a much greater than 1-to-1 ratio of fighter to system. And I think that by giving people these types of systems, augmenting their view of the real world so that they can share data seamlessly with these robotic systems, so that they can working off one common shared view of the world, you can be a lot more effective, a lot more lethal, and keep yourself a lot safer than you would if you're working with the unaided eye, the unaided ear, the unaided mind.
This comes as, and I reported on this last week on Friday, I reported that you're raising a Series G up to $2.5 billion that would double Anduril's valuation to $28 billion pre-money. What can you tell us about that and how this builds on that momentum?
Well, lots of people report lots of things. When we have something to announce on doing a raise, I'd be down to talk about it. But you're right, Anduril's had a lot of traction. We've been winning major fighter jet contracts, major submarine contracts. Now with this, we can continue my vision of augmenting the human form to surpass the limitations of our visual and cognitive systems. I'm one of those crazy people who believes we're going to spend all of our lives, or at least a large chunk of our lives, looking at the world through, whether you call it AR, VR, augmented reality, wherever you want to call that continuum. I'm a believer that we're going to VR, augmented reality, wherever you want to call that continuum. I'm a believer that we're going to mediate our view of the world with technology, and this is a powerful step towards doing it for the military first. Eventually, that's going to come to everyone. But I think that the really important thing here is we're expanding into an area that is directly built on top of human warfighters. We've mostly focused on building robots, robotics, things that are unmanned. We've actually had a warfighter systems business line for a few years now that we've never talked about publicly. And we're going to be rolling into our warfighter systems division, which I've been leading on the technological development side, kind of focusing on human augmentation, human performance.
Okay, so you got that, Anduril. And let me see what I gotta talk about. Well, I've read this article some way back where SpaceX, Anduril, Palantir, all these companies had a hard time getting government contracts because Boeing and Lockheed Martin and all these bigger like military industrial complex companies would block them out. So you would apply for a contract, but you would just get rejected over and over and over again. So I think they all sued. They combined and sued the U.S. government, probably with the help of Peter Thiel, Elon Musk, and all that. That's how SpaceX got their start. Otherwise, they would just keep getting blocked by Boeing. So that's pretty interesting. So I think Silicon Valley now is the new military industrial complex. They pretty much control everything now. And now you see the fruits of their labor over probably a couple decades now. As you see with SpaceX, then with Palantir, and now we have Anduril, which is making drones in Ohio with DeWalt, putting a lot of factories down into that area. So that's why you need a lot of illegals. You got to make those drones now. So they're not just doing Oculus lenses or freaking head up displays or anything like that. They're doing more. It's coming. And all these companies will probably combine together into some super neo Boeing type entity, right? And that's where we're headed. That's where we're headed. So buy stocks now. Anduril is not publicly traded though, so you only got Palantir at this point. All right, guys. Lightbridge. So I've been talking about this since this morning, right? For an hour ago, and still doing pretty good. Up 26% today. So up on the week. See, 13% on the week. Okay, very good. So it tested 10. It's come back to the 13. So this area is important. And why did I show you this? It's because I can zoom out here. Let's go to the monthly. Right here. Very good accumulation look type structure that's been built since 2019. Very large. And guess what? It's ready to break out again. So it had a false breakout attempt in 2021. Bad timing. 2021 was a time where that was like the peak of the stock market at that point before the interest rate destruction pushed everything down. Now we're back up here. Interest rates are unlikely to go up again. We're probably going to pause, right? And then probably go down in 2026. So from here into 2026, this might really rally really hard because this used to be $1,000 company. I don't know how it got up to 2,000 back in 2020. This is an old company, but it's been beaten up quite a bit, getting large volume for the past month. Yeah, this thing is ready to fly. So LTBR Lightbridge Corporation. I think we got to keep attention on this one for a nuclear infrastructure type stocks if this is really going to rocket. Okay, so another one to look at, HIMS. Again, HIMS is still trying to touch 45 over and over the past several trading days. So I said like the top was around like last Thursday, something like that. When it first attempted to get to 45. 45. Let's see. Yeah, right here. So this was the first attempt. Failed right there. Came back down. Now it made another one on Friday. So it's going sideways. I don't know. This might be it though. I think it's really hard to push this thing further from here. But I'll keep watching. See if there's a re-entry type here. Let's look at SMCI. See what's the update on that one. So it had good earnings. Oh man, it bounced. Shoot. Man. Yeah, so you probably would have got in. So I talked about it in the morning. I said, like, if this comes back, see if you can get back at 39. And then if you're using a riskier instrument here, you could probably get a 58-ish, right? And then set the stop loss here, like where it bounced right there at 55. So if you use SMCX, just get in and then hope for the best in the coming days because it looks like it wants to go up, right? But it might just keep going sideways. Just keep this on your watch list. So if it breaks out, if SMCI tries to break out 42 key level right here, 39 is this range that was set way back when. Let's see. Why did I put that green line on there? I think this was because, yeah, so September, this was the major fall from August right here. So if it can hold that level, then yeah, we can get to 50, 60, 50 and 60. First, it'll try 50, but the real target will be 60s in the 66 area around here. Yeah, perfect. That'll be perfect hit. Man, that'll be great. That's good. You can't tropes. You really can't. The only way is like just based on volume. It's the same thing with like BYDDY. Like look at that one, right? Like how do I? It's done it several times here. But if you look at just like a Wyckoff schematic, you could say like, okay, it's tested this support here, and then you look at the volume. Look at the volume of the last time it hit that support. Huge. Right? So the only way you could really know is if you trust the volume data. That's the other thing too. Like, do you trust this volume data? You'll have to assume that you can trust it. It's not being faked. So this was real buying at this point compared to any other time it touched this area. Look at that. So at that point in January 2024, so when Ryan asked me, because I pulled this chart up on the 24-hour stream, and I said, if you look at this chart, it's going to go up. And Ryan was like, how do you know? Well, you got this volume. You touched this thing many times. The next time it gets up here, it's probably going to break out. So we got here to this point, right? It couldn't break out. But when it pulled back, you had a shallower pullback, unlike this one and this one. You see these two? That's more aggressive, right? That's way more aggressive. So here, let me just take this away. You see that? You see this? It's way more aggressive. Every time I got here, it just pulled back hard. Look at this huge red candle. Pull back hard. Look at this one. It held here. It held on the moving averages, and it bounced right back up. And then once you saw that, you'll be like, well, wait, hold up. If this thing took about, how many bars did this one take to pull back all the way back down to the range? Well, let me get some here. So this thing took about 20 bars. So let's see, how about this? This is about the same, 20 bars. This was 20 bars, but it didn't go back all the way down. Guess what? That's shallower, right? So I'm just going to assume it's going to go up. And look, it did it. So now you'll be like, okay, now it broke out. Where are we going after here? You just take this whole range here, and then you use a point and figure. I'll have to do this. I have to do a point and figure analysis and count how many bars here, and then the range, with the range here between 40 and 90, and then I could guesstimate what target it will go to the next step. So that's about it. Now, if you looked at Lightbridge, I mean, it's quite volatile. So this thing I can't really say, but as you can see, it made a shallower dip here. It didn't make many tests above there. So even this, you can probably be like, wait a minute, do I believe it? But the reason I would probably believe it more than not is because this whole quarter, from October until February, like a quarter and a half now, it's like a quarter and a half. We've had a lot of volume compared to any other time before that. Like there's barely any volume here, like before this. Somebody's doing something. Like, is this fake too? Are these people just traders and they're all? I mean, I can't just believe that they're all just trading this up and down. I mean, they could be. This one is a little bit harder to prove, right? Because I don't know who is buying down here. I don't see significant volume. This stock is essentially a penny stock. You're just going to have to go on the belief that these aren't speculators doing this right now, because they could be. They could just be a bunch of gamblers. Don't know what the hell they're doing. They just see this chart or something, or they think they know what they're doing. But just on the shape of it, yeah, it looks like this, right? We're ready to go. So from that sense, I'm willing to take a chance. Yeah, I'm willing to take a chance. All right. Anyway, let's go look at Tesla again. So this area here. So let me use this one, Tesla. Okay. So this I see could be a continuation pattern, because we've been going sideways on Tesla since essentially 2021, right? Mostly like this. So if this is actually a real breakout, so we've had an attempt at a breakout. Now we're just going to go swing back and forth. So if we could do this phase D right here like this, then yeah, we should be trying to swing back and forth in this area. I mean, it could go down to 280s and then swing in a wider, more volatile way. But this is a halfway point essentially right here. So, I mean, if you do short term, it could be that it'll come back up here and then it's going to go back down further. So this is just the first reaction. 1, 2, 3. And it's going to do another one, zigzag back down here. And then the real buying point would be to buy back at 280s, in the 280s for Tesla. So this thing might have to give it all up. If I think March into April is going to be bad, then yeah, I don't think Tesla's going to hold in like the 3s. But temporarily as a trade, like you could go counter trade. Like this thing is already rolling over the moving averages on the daily. Now, if you look at the weekly, this is fine. You could just wait for this moving average to roll back up here and then buy it there, because now we've broken it. So I think this is pretty significant. Two weeks like this, even if it recovers, I think it has to roll back down again. So yeah, that's why I'm saying Tesla's a potential trade. And if you want to use like the ETFs, you can use TSLL thing or TSLR. Yeah, TSLR for long and TSDD for short. So 2x short if you want to leverage short it, leverage long. So you can trade this between this range right now. So once you see this, you're kind of like, okay, I could trade around this range somehow. Maybe halfway up here, because I don't think it's going to drop right away down here first. It's going to try to recover a bit, then short it again. So so this is a good trade right now between this area, and then eventually it'll be done doing that and it'll finally go up. But that's probably later in the year. So this is where people get annoyed. Most of the time you think like, yeah, so long-term people would be they bought down here or they bought here again. And this is, again, you see like the way it's been moving. You see a lot of volume came in here into the bottom here. So you knew a lot of people did buy below 139. So 139 definitely held. So again, I'm thinking there were buyers, but if people are thinking this thing after Trump was just going to fly right past it, it didn't succeed, especially when Jerome Powell just wrecked everything there. Yeah, so Tesla, I think ignored it for the most part, but still, it was about to like ready to go that week when Jerome Powell opened his mouth, and then once he did that, we just went sideways, and now we're going to the New Year's. People are just selling off, probably because of tax reasons. They didn't want to sell before the New Year's for taxes, but now it's after the New Year's. They've been like, probably not ready to go, so they're just leaving it, and it'll just probably pull back. So they're gonna get some more suckers to get it back into there. Okay, let's see what else. Talked about. Oh yeah, Upstart. I mentioned already Upstart. Let's look at how it's doing now. Still doing okay. So it's holding a lot. It was like about 30% for a while, but it's still like 25%. Very good looking. Same thing with Affirm, right? Similar looking charts. You got that nice cup area here. You're making a little cup here, going on top back to the resistance again. So it's ready to move higher. These things are ready to move higher. There's a lot of interest. You got this crazy looking creek. They call this a creek in Wyckoff. So when you make this first initial blow up move right here, you hit right exactly at the resistance set back in May 2021. And then you roll back down and you go into this blue line of area of support, which was like heavy resistance because this thing was punctured through and it fell back down, went back, touched again, and then you made this lower level. So every time it just repeats, right? It's just fractal. You make a cup, you make the base, you go up, you go back down as creek, and then you make another pattern here where you just like go creeping up. You just creep because you're making higher lows. It's building energy, and then it pops right there to the next resistance. Then you go back down, retest, and then you go back up. And guess what? We completed the whole thing all the way from 2021 now to 2024. And then now we're free. You're free. This huge gap right here, you see that? So this is now we're back in this area, which has rarely been tested because not a lot of trading happened between $90 in Affirm to $71. So you could just punch right back through to 100 real easy right now and fly. That's if it's going to happen. So February, we're running out of days in February because March is around the corner. I'm not looking forward to March. If it's going to do it, it better do it now. So that's something to consider. A lot of these stocks and trades, they're just going to be temporary, I think. The real move will be in May. So I think with a bad March and April. So we're still going with that timeline. AOI, let's see. Yeah, okay. I'm gonna try this again. It pulled back to 26. Yeah, I might try it again at the end of the day. Buy it again down there. DNA. Let's see if we're gonna try this one again. Okay. Yeah. I'm gonna wait a while on this one. See if this thing can move up in the next several days. Because we're kind of this is sort of a support area. You can tell, right? You see that? Like it's tested it twice here. So December, early January, come back here, and then see if we can go. So this huge red candle, that's why no good. When you do this, and then you have the huge red candle just completely obliterating whatever gains you made, then you're going to have a bad several days. So we've already had 1, 2, 3, 4 trading days going down, essentially. Well, except for this Friday, but still, the Friday didn't do anything. It didn't even like come halfway up here of the red candle. So you knew the next several days were going to be bad again. Now let's see. Earnings 27th. Yeah, we got time. We got time. We could go back up to 16 from 11. It's volatile enough to do that. So that's why you keep looking for things to do in the last half of February. See if you can makes a little bit more money, and then from there get out and wait for March, April, or short. You could just see if it's time to short the market. But if you're looking at the QQQ, it's doing okay. All right. It's still trying to hold on, even with the bad CPI report. We'll have to see tomorrow with the PPI at 8:30. And then with the two pieces of data, you got the producer price index, consumer price index, combine them, you get the PCE, personal consumption expenditure. That's the number they look at. So you get the two pieces of number, you get the third one. The third one is what the Fed cares about. So that's all you need for this week. And I think Jerome Powell's talking to the House right now, but I don't think that it's going to say anything different from what he told the Senate yesterday. Okay, so let's look at some Chinese stocks. Okay, what's my favorite one? So we talked about BYD, DY, beautiful, right? Beautiful, beautiful, up 7% today. Oh man, beautiful. Finally broke out. Everything's working. Thank you, tariffs. Apparently, tariffs are great for China. China loves to get tariffed. More domestic consumption, I suppose. So you're not going to sell anything from America to China, but Chinese can just consume their own products. That's great. So Xiaomi is another one. XIACY. So the first one was BYDDY. Up 3% today, and I think we've cleared 22. We've pretty much cleared 22. And where does it go from here? Who knows? We'll go to space, I suppose. We don't have any history, at least in the US markets. Maybe it has some more history if I looked up the Hong Kong chart or something of this company. But hey, this was a big deal to crack that January 2021 level. Okay, let's see what else. Oh yeah, Futu, FUTU. That's Futu Holdings. So up 9.9%. I think we're making it here. Very good looking chart. Let me see. Yeah, this level probably important because this was a breakdown from this 116 area. And then TIGR up fintech. So both of these are kind of like the Robin Hoods of China. So this has nothing to do with tariffs. Shouldn't care about tariffs. It's all about domestic appetite to buy stocks, and I think the Chinese government is heavily pushing people to buy stocks. It's patriotic to buy Chinese stocks within China. So if the Chinese are buying stocks now, and most of the young people can't afford real estate over there anyhow, it makes sense. So you got this two areas here, I think, to look at between 13 and 5. So we're at 8 right now, $8.57. Probably good range to trade it as well. So yeah, up 15% today. Very good. So this is something I've been mentioning several times before, but now everything looks very good. That I would say, yeah, I'm going for it into March. So everything is up until March. You got to see how it goes from there. Because everything's all the stocks have been going up since the 13th. Okay, the week of the 13th. That was the last bad time, was before that. And I gotta see what the numbers are tomorrow, and then from there, see how the dollar goes. Let's see what the dollar is doing right now. 108. Yeah, this thing has to drop. Definitely still has to drop. I have a video from the cycles of foundation of cycle studies, but I don't know. I playing it. If I last time I checked when I was playing stuff in 720p, it looked pretty fuzzy. So I don't know. Let me try again. Play this, see how it goes in. But the next time I play something, maybe I'll have to reset set the StreamYards to 1080p, see how my internet goes with the Wi-Fi, and see if it produces a better result. But I'll try to play the video, and then I'll go back and see if it's fuzzy. But you know, their video is also fuzzy, so it makes it doubly worse. All right. Yeah. Let me read the articles though. Let me read
What we're seeing right now, these are
No. Not playing the video. I need the article. Read some articles. Oh man. Short one and then a long one. Okay. Yeah. Let's see. Got this and this. Okay, good. All right. Now read some articles. All right. Let's see. And put some background music for the long one. All right. DeepSeek fuels bullish mood on China tech stocks. The sudden emergence of Chinese artificial intelligence developer DeepSeek hit U.S. technology stocks 2 weeks ago, but closer to home, the company is fueling investors' optimism. Hong Kong's Hang Seng Index closed 2.6% higher Wednesday, led by tech stocks including Alibaba. Here's what has happened recently. The Hang Seng benchmark has risen 16% since January 13th, 2025's low point. Raymond Ma, Invesco's chief investment officer for China and Hong Kong, has said DeepSeek's latest R1 AI model was likely to lift e-commerce, AI smartphones, and other products. Ma said Chinese stocks were undervalued relative to the U.S., and there is a strong case for a reassessment. Alibaba shares jumped 8.5% on Wednesday on a potential partnership with Apple to provide AI services to Chinese iPhone users. The e-commerce company is a leading AI developer in the country. Battery maker Contemporary Amperex Technology has applied for secondary listing in Hong Kong that could be among the financial hub's biggest in years. CATL is already listed in Shenzhen. Shenzhen is like their tech hub. And so the stock exchange on Shenzhen has a lot of tech companies in China. The listing revived hopes for Hong Kong's initial public offering market, which has been moribund until recently. So that's good. That means good for Futu and TIGR. Look at those stocks. Perfect. If there's a lot more Chinese stocks for them to buy, that's great. So that'll spur a lot of domestic stock buying. China's tech stocks enter bull market after DeepSeek breakthrough. Budget AI model triggers global reappraisal of Chinese technology companies. Arjun Neil Alim. So he wrote this 7 hours ago. All right. A benchmark for Chinese technology stocks has risen more than 20% in the past month, entering a bull market as investors pile into the country's internet companies despite following DeepSeek's artificial intelligence breakthrough. The Hang Seng Tech Index, which tracks the 30 largest tech groups listed in Hong Kong, is up 25% from its 2025 low. It has outpaced the NASDAQ 100's 4.4% increase and 0.5% decline for the Magnificent Seven U.S. tech stocks over the past month. The gains in Hong Kong reflect renewed foreign investor interest in China after DeepSeek, an AMI model apparently developed with far less computing power than U.S. counterparts, triggered a global reappraisal of Chinese tech companies. Only Chinese internet companies are globally competitive and comparable to the U.S. Magnificent Seven, said Bush Chu, investment manager for Chinese equities at ABRDN. That involvement and sentiment has driven some flows back to China. We are starting to see some outperformance and a rally in China in recent weeks because of that. Internet giant Alibaba rose more than 6% on Wednesday after Chinese media reported it has been working with Apple on rolling out iPhone makers' AI features in China. The positive movement is a boon to China's market, which have been buffeted by concerns over U.S. President Donald Trump's tariffs, a mainland property slump, and deflationary pressures in the Chinese economy. Mainland China's broader CSI 300 index is up just 4% in the past month. Okay, blah, 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 blah. Let's see. Okay, conversely, Chinese tech shares boomed. Cloud computing and tech hardware companies that stand to benefit from AI innovations have led the recent rally. They include Alibaba, consumer electronics group Xiaomi. Didn't I talk about that? Search engine developer Baidu, and electric car maker BYD. BYD, I mentioned. So those two, Xiaomi, BYD. Okay, we talked about them, which are up 43%, 34%, 13%, and 40% respectively in the past month. E-commerce platforms JD.com, JD is kind of crap, and Meituan have also advanced 24% and 11%, boosted by relatively strong consumption data from the Lunar New Year holiday and growing expectations of large-scale fiscal stimulus from Beijing this year. So, the problem right now is that I'm still waiting on China's loan data. They were supposed to do it over the past couple nights on Monday. Then it was delayed again to Tuesday. Now it's Wednesday. I have no clue when they're going to drop that data. We need to see how much growth their loan market is doing. If there's a lot of stimulus that's being absorbed, then we can say, yes, things are going well for China. Okay. In any case, let me see what's up. Nothing's moving up in the market yet. So, okay, nothing's changed. All right, so let me play the video. So let's see what else. No, blah, blah. Okay. While DeepSeek is known for using unique methods to overcome hardware restrictions in China, we believe AI investments in LM's advancement by leading Chinese internet companies have been underappreciated by investors. U.S. strong in terms of 0 to 1 innovation, but China is stronger in terms of 1 to 100 innovation, in terms of widening access and adoption of tech. All right, whatever. Okay, that's enough. That's enough of the propaganda today. But yes, it doesn't matter. You just want to make money, right? So buy stocks that are moving up. That's the goal. So now we got to look at the dollar. So let me see how it goes for you guys. I'm going to have to watch back this video to see if the resolution is okay. So I'll play a bit of this, and then I'll probably play it again later, either today or tomorrow.
Hello again, everybody. This is Dr. Richard Smith here on Cycles TV with the Foundation for the Study of Cycles. Good to be with you again today. And I hope your year is going well. It has been adventurous already, hasn't it? Markets volatile. One of the things that we anticipated. And so today I wanted to take a look at the US dollar in particular. And is it King dollar or is it King Kong dollar? So I think so much hinges on the US dollar right now. And it's very important to keep an eye on it, a close eye on it, obviously connected with interest rates and bonds, treasuries. A strong dollar is the official policy, according to our new Treasury Secretary, Scott Bessent. But a too strong dollar is obviously going to be a problem. So let's see what the cycles have to say about the state of the US dollar and its related financial colleagues. But before that, I just wanted to revisit our show from a couple of weeks ago on copper because, wow, check this out. Let's see. All right. That's not it. So here is the cycle that we looked at 2 weeks ago on January 28th. I said it doesn't get much better than this. This is the 158 period cycle on copper futures on 4-hour data. Okay. So when you see a cycle like this, pay attention. And we were right here on January 28th when we were last together. And this cycle worked to perfection. This move here from 420 at about the bottom of the cycle up to 470, a 50 cents move in copper. Incredible. So nice outcome from our last time together. And just checking back in on the daily cycles in copper. We know the weekly cycles in copper have topped just like all the other cycles in equities, right? But daily cycle still looking like it's got a little more room to run, you know, maybe a week or two. And the 4-hour cycle definitely stretched. I mean, you can't really ask for more than that, but there is still a little bit of time left in this up phase of the cycle as well. So always like to revisit what we did the last time, and this was a good outcome. So that's an incredible cycle. Pay attention to that one. Keep an eye on it. When we find others like that, we'll let you know. All right, so moving on to the dollar. Take a look at our usual preambles, one being the sentiment from the commercial traders, the commitment of traders. So we can see here that the commercials have been, you know, they're net short the dollar. They're below the zero line here, but we're definitely accumulating dollars overall, or, you know, not short as many dollars. So I would say this is mildly bullish for the dollar. You know, commitment of traders can take months and even years to really fully reveal it's the outcomes that are being hinted at. So I'd say this bodes for a stronger dollar over the next year. Meanwhile, small traders are getting pretty frothy. Okay, they're not quite up to 80 yet, but definitely in the neighborhood. And that is a caution signal in the short term. Seasonality wise, we got some strong dollar seasonality in months 1, 2, 3, January, February, March, right? April, some is one of the more bearish months, but 1, 2, 3, and 5 are all in the top months of seasonality. And we can see that also here in the weekly seasonal futures charts from seasonaltrader.com. Thank you, Jake Bernstein. Some bullishness into March, some bearishness into April, and bullishness in May. So just reiterating here, we got commercials accumulating, longer term strength. We got small trader getting a little bit frothy, shorter term weakness. We do have some bullish seasonality in the dollar, some tailwinds, I would say. Where are we now? We're about here, so we could see a little short-term pullback with some renewed strength. And I guess this might be getting a little bit ahead of where I want to ultimately go today, but since it's here in the PowerPoint, I'm going to cover it now. This is just showing correlations of the dollar DX here with other assets. Okay, these are equities, ES, NQ, YM, and RTY. These are bonds, 2s, 5s, 10s, and 30s. precious metals, Bitcoin and Ethereum, energy, the dollar and the euro and the yen. So we can see on the 1 hour correlations, a lot of negative correlation with equities and shorter term treasuries. Less negative correlation, but still negative on longer term treasuries and metals, Bitcoin, Ethereum, etc. Positive with energy. Interesting. If we look at the 4 hour correlations, pretty neutral. This surprised me. But if we get back to the daily correlations, anyway, looking at correlations on daily data going back 250 bars, again, negative with the equities, negative with bonds, metals. So the dollar is really negatively correlated to a lot of things. So also something to keep in mind. All right, let's now get back to the cycles. Yeah, okay. All right, so we're starting out here. I'm looking at the dollar index from Yahoo Finance, dx-y.nyb-w for weekly Yahoo Finance. And we see here, we've got the 177 cycle, very clear on the spectrum, right? And then also this 87 cycle. So why do we like these so much? One, a lot of definition on the spectrum, steep sides, sharp peaks. It would hurt if you sat on them. Strong Bartels. I mean, really, cycles don't get a whole lot better than this. Number 1 and number 2, strength, right? Strength telling us the most bang for the buck, so to speak. In terms of, you know, the level of price move that you get during those cycle phases. So we got 2 very strong cycles here on the weekly data. Let's see. This page is unresponsive for some reason. I'll try refreshing it, and give me just a second here. No, thank you, Google. All right. So I'm going to try to refresh this one while also, oops, okay. Just a moment. All right, we'll let that reload. All right, and then here on the futures contracts on the dollar, so very similar, 175 and 88. We already knew this, but bullish from the weekly cycles, at least into later this year. Okay, so we know that the weekly cycles in the dollar suggest more dollar strength by the end of the year. Yeah, so here we are back here. Same thing. And turning on the cyclic RSI, that's what I wanted to do. Okay, so clear that there's dollar strength into the summer and the fall from the cycles. There's other reasons that the dollar might go down, but the weekly cycles aren't one of them. All right, moving now to the daily cycles. So again, this is the dollar index from Yahoo Finance. And on the daily cycles, we've got really one cycle that kind of sticks out better than the rest. This 143, suggesting that we've seen a short-term top in the dollar and could well get some correction in the dollar for the rest of February and maybe even into mid-March. Got a nice cyclic RSI sell signal here from being way up above the bands and coming back in. So on the daily cycles, we're seeing some suggestions of dollar weakness over the short term. Just confirming that here with the futures data, DX equals F. These are very similar. So 142 here. So we see on the daily data some signs of caution. You know, this longer term cycle here. That's going to slow down. But I think the cyclic RSI sell signal here on the 142-day cycle is something to pay attention to. All right, so moving down now into some shorter time frames. This is the 4-hour data on the dollar. And we got some nice cycles here, in particular, this 162. Number one cycle, number one strength. Number one Bartels at 92. And clearly stands out on the spectrum. Not as great as the 4-hour copper cycle, but let's go back to that for just a second. That was 158. So we see here on the 4-hour dollar cycle, 162. That's interesting. I mean, that's nearly the same. That's pretty much the same length cycle, right? So we got that coming up, nearing a top, but momentum kind of on our side. Even got a momentum buy signal with a little couple days left in the 4-hour cycle on the dollar. So this is very short term, the 30-minute data. Some pretty good cycles here, bad momentum. So going across the time frames, one more look here. We got strength on the weekly. We got weakness on the daily. A little bit of strength left with some really nice cycles on the 4-hour. And a little bit of strength left from the shorter term cycles down on the 30-minute level. So we could see a little lift in the dollar. The inflation numbers come out tomorrow and Thursday, the PPI and the CPI. Maybe there's a little pop in the dollar. But the daily cycles are pretty clear that we could see some weakness overall for the next few weeks until getting some strength into the middle to end of the year from the weekly.
All right, so that's it. So we're going to get a pump. I think we're going to get a pump eventually. So let's see what the PPI will do tomorrow. So if we're going to get a short-term weakness in the dollar, great. That's really great for the Chinese stocks, Mexican stocks, and overall U.S. stocks because, yeah, a lot of the large caps require a lower, weaker dollar. You don't want to pay those repatriation FX costs that keep getting hit So that's going to help a little bit. So let's see what it goes into the end of February, maybe the first week of March, and then you'll start seeing issues. Now, next week we'll have a shortened week. Okay, we have Monday off, President's Day, and it's going to be options expiration for the monthly contracts. And not monthly it's not futures, it's options. So I can't say contracts. It's expiration for the options. Okay. But it's not going to be triple witching. This is not March. So it won't be that big, but still something to watch. And we only got 4 trading days too. So that's going to be important. Before we're going to get into NVIDIA on Wednesday, the 26th of February. Everybody's going to be watching that one. I mean, SMCI right now, of course. Yeah, I don't see any spillover effect into NVIDIA. NVIDIA is down like 1.56%. Still stuck at 130. So that's not going to be much help there. In any case, yeah, let me see what else is going to be for the earnings. Wednesday. Oh, we got Reddit. Reddit is going to be something to watch. I'm not in Reddit, but definitely have to see how the market will react to that one. Okay, so let's see what is going to be on the calendar. We have Reddit, okay, RDDT, Hood. You got Robinhood, yes, RHOOD. Kinross Gold, so another miner. That's my favorite gold miner. So today we had Barrick Gold, GOLD, going up, so that should be a good sign for KGC, Kinross Gold. And you have Albemarle, ALB, for lithium and other metals. Let's see, Cisco as well as CSSCO. It's not as important as back in the old days, but yeah, Cisco used to be some big bellwether for technology stocks, but I don't know how much effect it has on. But you definitely still have to pay attention for the NASDAQ. Then you have MGM, so see how the sports betting does. I guess that'll give you a hint or clue before DraftKings, which will report on Thursday after the close, DKNG. Okay, guys, I'll see you. And you remember to like and subscribe. Also pay Portia her dues, $PORSHAJAYE $, and then and then we got the Urban Landlord tip jar, Streamlabs. So pay up and support the channel right there. Pay for the tip jar. Yeah, and I'll see you guys. I don't know if I'll do one later today, unless let me see. Yeah, Reddit. Well, I don't know if Reddit matters. Hood, does it matter? No. We have to wait for tomorrow morning. Oh God. Oh, probably China will be more interesting than any of those, honestly. Yeah, hopefully China will release its data. Can't trust the Chinese government to do anything. They're probably just massaging the data right now as we speak, just making up fake stuff. So, all right, I'll see ya.
Feel like I should go. 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 Feel like I should go.